So I'm pretty sure a lot of Alibaba shareholders will be quite curious, to know what is the current valuation, okay? Because the price has shot up quite a lot already since their lows, okay, around 80, and so it's gone up by 53%. So I'm pretty sure you have this question or even things that you are asking here, and that is what is Alibaba's intrinsic value? Yeah, this is the price that you want to know, and then is the share price right now expensive already because it has already went up by 50% up. Yeah, then of course the next concern is can the share price still go up? Yeah, so in this video here, okay, I will answer all of this to you guys. Okay, so before you move forward, okay, to understand this valuation, okay, I highly recommend you guys to watch my previous video here, okay, on why I like Alibaba right now, where I explain all of the growth factors that I discovered, okay, right now on Alibaba. So in order to understand the reasoning for my valuation, it's very important for you guys to watch this first, okay, to understand my thesis right now and what I'm seeing, okay, with Alibaba. So when you get a picture and understand my approach already, then you will understand, okay, the valuation, okay, for Alibaba. Right, so you can pause it and watch it. Right, if not, okay, if you already watch it, you can just continue. Yeah, okay. So why do the BIA team and me, okay, right now decided to take an interest in Alibaba? Okay, because previously at that time, okay, when we read, okay, we never saw any strong growth factors or signs, okay, for Alibaba. Okay, and we pivot our interest mostly on C Limited. Okay, and okay, good. All right, since then, when we cover since around 1.5 years, 2 years ago, okay, we already profited around 200 to 300% already. Okay, and now that we want to reallocate, okay, a bit of the profit there to another opportunity, and this time, okay, finally we have been following Alibaba actually. Okay, and this time we finally saw some signs, okay, quite obvious signs already. So that's why we decided to take an interest in this company, Alibaba. Yeah. So let's move forward, okay, to the valuation right now. So the valuation, let me tell you this, Alibaba is seriously very, very cheap. Okay, for a very strong company, okay, with established businesses in China especially, okay, the market right now, okay, I don't understand that they only price it at 2 times price to sales. Okay, means what? Means for every dollar generated by Alibaba, the market is only willing to pay them 2 times. So it's really very, very cheap. Okay, that means in a sense we all agree Alibaba is undervalued. Okay, but what is the real reasonable value, okay, that we should assign to them? Now, I will just cut to the chase and I will tell you this. On average, since 2016 until today, right, the average price to sales that the market is willing to pay Alibaba is actually 7 times. Yes. So because you can see throughout the years, right, okay, the market actually willing to pay above 10, 15, even higher. Then suddenly there's a very depressed valuation. So we take out the average. Yeah. So on that time, okay, we can see the average will be around 7 times already. So at this point, okay, for those of you who watch this video, you would have known already, the market willing to pay only now 2 times. But on average, it's around 7 times. So there's a potential, okay, if the market is willing to re-rate Alibaba, there's a potential 200 to 300%, okay, of profit, okay, should the market re-rate Alibaba. Okay, so at this point, we all know it's very undervalued. Now, and the reasonable one, the intrinsic value is around 7 times price to sales. Now, we decided to go one step further. Okay, we go and compare, okay, with another similar peers. Okay, whether this 7 times price to sales, is it reasonable, okay, to be paid when compared to another company. So we took, okay, other companies that is their cloud providers, okay, or even e-commerce companies. So that's why I decided to take the other 3, and that is Amazon, okay, Microsoft, and of course Tencent. Okay, Tencent and Alibaba in China are the in a most similar peer, okay, in the same country lah. That's why I decided to take Tencent. So you can see right now, okay, as of today lah, Baba, the market is willing to pay only 2 times. Amazon, 3 times. Yeah, because why? Amazon is also an e-commerce company. They are also one of the largest cloud provider, okay, and other businesses also lah. Yeah, so they are roughly similar. Then Tencent, okay, in China, the market, okay, are willing to pay them 6 times, 6.37 times. Then of course, Microsoft, okay, the market is more confident on them. That's why they're willing to pay them 12 times. So what do we see from here? First thing is this: we know already Alibaba is very, very cheap among all the other peers, only 2 times. Okay, and if on average, okay, around 7 times, is it reasonable? I feel it's reasonable. Why? Because the market is still willing to pay Tencent at 6 times here, so it's not too far off. Okay, and the market is even willing to pay Microsoft maybe around 12 times here. Okay, so let's move on to the next one right now. So my valuation right now is this: if the market is willing to still pay Alibaba at 2 times price to sales, okay, and that is the price right now, okay, at 12.96. Okay, now, if the market decided to re-rate them, okay, and follow Amazon's price to sales, then yes, okay, the price for Alibaba is $184, and there is a 50% upside. Now, if, okay, the market decided to follow, okay, how much they're willing to pay Tencent, and that is around six times here. Then it's $369. But of course, if Alibaba, okay, the market wants to pay them 7 times price to sales, and that's $430, and that's a 250% upside. So if you want to ask me, okay, valuation is a range. Okay, there's no really one clear number, okay, that you can follow. Okay, it's around a reasonable range. Yeah. So there are two ways to think about it. First is you decided to be very, very conservative. Okay, you don't want to overpay and stuff, right? So okay, you decided the market, okay, maybe will go up to 3 times to pay the same valuation as Amazon. Okay, so if that's the case, but right now the price is around 120, then the intrinsic value is 184. So there is a 50% chance, okay, of upside should the market decided to re-rate the multiple. Okay, then but on me personal view, of course, okay, I won't take, of course, Microsoft's price to sales because a big difference, right? I just take the same price to sales ratio as Tencent because this is what the market is willing to pay Tencent, right? So and they are roughly the closest peer in China right now. So I just take 6 times. So if you ask me, okay, me personally, all right, Alibaba's valuation for me personally, okay, I take price to sales 6 times. So the intrinsic value for Baba, okay, is around $369. So there is an upside of 200%. Okay, do you understand me? Okay, now, of course, there is a caveat. There is a caveat. Okay, so a lot of people, when they see valuation, right, they say, oh, wow, the valuation is like that. Okay, if I own this company, that means I will make money already. This is the mistake of a lot of investors. Okay, there are a few caveats. There's a reason why market are willing to pay Baba for 2 times only. Okay, if you have been following Baba for many years, okay, there's a lot of concerns like government intervention, then the slowing down growth, and a lot of other things like management also not so stable and stuff, uncertainty. So the market decided, okay, really don't like the company, despite the company slowly has been growing a little bit, but then the price has been suppressed down. So that's why until today, the price is around 2 times only. So there is a caveat, okay? If you want, okay, Baba to go up, okay, go up to, let's say the market willing to pay them at 6 times price to sales, okay, there are a few things that you need to happen, okay? We'll only go back, okay, to price to sales 6 times if, number one, the growth re-accelerate to 10%. Now, if you watch my previous video that I showed you just now, there are signs already that growth will re-accelerate to 10%, okay, because of the cloud. Okay, their cloud business is really growing tremendously well. Okay, so I won't be explaining much on this. Okay, if you want, okay, it's another topic by itself. Go watch the video and then you will understand. That's why I say you need to understand that, then only understand my valuation approach. Yeah. Then the next one is they must prove consistent 10% growth. So they need to consistent to show that because the market is only willing to be more confident to pay a much higher multiple only if they can show consistent 10% growth. If they are able to show that, then yes, it will go back. But currently, right now, these two, okay, it's not confirmed yet, but there are signs that they are going there. Okay, then you see, okay, these three factors here. Okay, management is definitely stable right now because previous years, suddenly the founder, got some issue with the government and stuff. Then the management changing here and there. Okay, but right now it's stable already. I can see that. Then another one, no government intervention. Okay, if you have been following the news, okay, the government right now has already assured, okay, that the tech companies, they have their support, okay, and there won't be much intervention already. And right now, I've been following their earnings call. The management right now, I can see they have been changing their tone already. Okay, they are more honest. Okay, and then there's a lot more transparency. They are more willing to give, okay, more information and share, okay, what is the future growth trajectory. So because of this, okay, the market seems to be a bit more confident already on Baba right now. So that's why you can see on this period here, suddenly there's a go up, right? Because previously, if you see the price around 80, right? The price to sales is so cheap, it's around, I believe it's at 1.3 or 1.5 times only. Yeah, so that's why now, because of these three factors here has already came back, the market right now is a bit more confident already. So that's why they decided to re-rate the multiple already. So this is how it works in the stock market, right? So it's good to see these three things is already there. So, and these two above here, the growth acceleration and consistent 10% growth, they are signs moving forward already. Okay, and then investor confidence is also slowly coming back. Okay, so let me repeat. If you want the market to re-rate it and the price to go up, these few things must happen. And if it happens, then good for you guys. Okay, and then the price will definitely go up. Okay. Now, the next thing is this. Now, why I write here Microsoft playbook here? Okay, no other investors will share with you this. Now, I will share with you what we see with Alibaba. When I saw, okay, that the business of Alibaba right now is leans heavily, the growth is from the cloud business, right? I'm thinking, is it Baba right now following Microsoft's playbook? And let me tell you this, this is what I saw, and see whether you agree with me or not. So you see, you can see the stock price of Microsoft, right, throughout the year 2000 until 2014, is very flat. That means there's not much growth. The market don't really like, it's like nothing for this company. Okay. It wasn't until 2014 that this guy here, Satya Nadella, take over as CEO. And what happened? You can see the price from 2014 here started to go up. Yeah. Okay. Why? What happened? This thing happened. Okay. Because in 2014, okay, Microsoft decided to focus on their cloud business. And I think you all know Microsoft's cloud business is called Microsoft Azure, right? So because of this, right, okay, he has been focusing and growing on this part of the business. And that is why until today, you can see the share price go up here. Okay. So the cloud business, you can see starting from 2015, this is the cloud business. You can see every single year, their business, the revenue has been growing very, very fast. And it contributes a significant amount of revenue for Microsoft. So you can see this Microsoft revenue by segment here, right? Previously, okay, the growth is coming from their Microsoft Office, the subscription and stuff, right? So it's a lot from here, the blue color one. Then you can see the yellow color side, the intelligent cloud. You can see it's getting, thicker and thicker, right? And that's Microsoft Azure. So that cloud business decided to grow, and it occupies, okay, a majority, okay, of the revenue segment already, and it contributes to the business growth. So that's why you can see why, okay, Microsoft's share price go up. Okay, go up here because there's growth, okay, there's certainty. But there's another factor that happens behind the scene on why the share price go up, and that's because, okay, the market decided, okay, to re-rate the multiple, the price to sales multiple for Microsoft. Okay, so you can see the price was fairly flat at that time. Okay, see here, you see this one, very flat, right? Why? Because the market was like, yeah, I'm just only willing to pay you 3 to 4 times price to sales only. That's all, nothing else already. And you can see starting from 2015 onwards, when the market start to see, okay, the business on the cloud segment start to grow, there's a new business coming, okay, and then there's certainty in growth. All right. So that's why the market are more confident in the business already. They like the business, they like the certainty, and that's why you can slowly get more and more confident. And that's why you can see the multiple decided to go up. Okay. In case you all do not know, this blue color is not the share price. It's the price to sales multiple. Okay, price to sales multiple. So the market are getting more and more confident. They like the stock. So that's why more people know Microsoft. So that's why the market went up. Okay, the multiple went up already. Okay, of course, the highest was 12 times. Okay, so that's why the last one, okay, the market is willing to pay, okay, for them is 12 times. Okay, so that's how confident here. Yeah. So imagine that right now, Alibaba here is around at 2 times. It has been flat, okay, for a few years already. The market has been paying them for around 1 to 2 times only. And I can see right now, this period here, okay, is it Microsoft's period here? Is it? Okay. So if Alibaba can grow the cloud business, okay, they can show to us that they can execute very well. There's a lot of adoption, there's demand, right? Hey, maybe in the future, okay, Alibaba's multiple will be re-rated, okay, increase, go up, the market getting more confident already. All right. Then they will re-rate. And then if the market re-rates the multiple in terms of the price to sales, then coupled with the revenue growth, then yes, okay, the share price will definitely go up. All right. So this is, okay, what I want you guys to see. Okay, this is what we are seeing right now in Alibaba. Yeah. So price to sales right now is 2 times. Okay. If let's say the market getting more and more confident in the future, hopefully, okay, with the business growth coupled with the multiple, the market is willing to pay them. If it's willing to pay until the same as Tencent 6 times, then yes, okay, there is a potential upside of 200% here. Okay, because the intrinsic value for Baba is actually 369 dollars right now. Okay, if you are very conservative, then okay, pay the same as Amazon here. Okay, that's $184, and there's still a 50% upside. Okay, but the consensus here is that we know Alibaba, despite the price went up high here, okay, it's still very, very cheap. It's still very cheap. Okay, look at the multiple. Don't look at the share price movement. If you look at the share price movement, it will definitely deter you from seeing the stock whether is it cheap or expensive. Okay, if you look at the multiple itself, then you will see a bigger picture. Okay. Right. So again, guys, okay, I highly recommend you guys to watch this video so you understand the thesis of Alibaba here. When you get to see, okay, the potential growth, then you will be more confident on the valuation, okay, that I'm presenting here to you guys here. Okay. So guys, I hope you guys get a lot of value from this video here. So as you all know, okay, for the BIA YouTube, we follow these three stocks: Palantir, CrowdStrike, and Alibaba. Okay, so if you want us to continue follow this stock, do consider to subscribe. Or if not, okay, you can continue to subscribe to our Telegram also. Follow us there because there'll be more engagement. If you want more instant updates on Alibaba, for example, I'll be posting there also. Yeah. So I see you in Telegram. Yeah. So thanks for watching, guys.